Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketCage.com, and in this video I am going to show you how you can find really good, safe, bullish trades in an environment that many traders are very cautious in, justifiably so. So if this market's going to continue higher, how can you approach it in such a way that you can trade from the bullish side and still understand when it's time to get out? It all starts with this sector chart that you see right here, and we'll get into it in just 1 second. Before I do, I just want to make sure if you've just found us on YouTube, please subscribe to our channel, and also know that you can find more videos and trading ideas just like this at marketgauge.com/tutorials. Additionally, make sure you follow us on Twitter, if you do Twitter, at MarketGauge or at MarketMinute. And of course, if you don't already know, you can see this video in HD. It's much clearer simply by using the settings in the lower right-hand corner. Okay, so how can you be bullish in an environment where the market is actually a negative? So when I say the market's negative, I'm referring to the phase. The phase in the SPYs right now is bearish. We're in a bearish phase, and I'll show you that on a chart in just 1 second. Actually, I should back up for just 1 second. Also, I got here by going to resources and little big view and then sector summary. All right, you can also get here just by going marketgauge.com/sectors. So clearly the market for the year is down, right? Down 5% over a 6-month period, which we consider to be very important. Still down over 2%, and 3 months down 7.5%. All right, but notice something in this chart or in this table. We do have some sectors that are actually turning bullish. Now, there's a couple of really important data points on this table, or I should say, these are the ones, if you just want to boil it down to the ones that I think are most important. If you're not already familiar with MarketGauge, you know that statistically, we know that the 6-month time frame is a very powerful time frame. The other time frame that we don't talk about all that much except with our members is year to date. Year to date is an incredibly powerful time frame, especially when you start the year off as negatively as we have. Now, let's take a look at where the green starts showing up. So SMH is the strongest one in the 6-month period, so definitely worth looking at. If you've been watching these videos, you know I've been looking at XLP for probably almost months now, and in part because it's had a strong 6-month. Now it's also, and has been actually up for the year to date. Remember, that's important. Now XLU, we've also talked about. XLU has the most green numbers, but XLU can also be viewed as a defensive play. So we're not going to talk about XLU as a place to go to right now, because this video is about how you can be bullish and where you can be bullish. And the reason you would want to try and be bullish is because market bottoms aren't always obvious, but when they become obvious, they were then obviously the best place to have gotten in. So how can you get in when things are really not so obvious? That's what we're talking about here. So semiconductors, we definitely have to check those out. XLP, now note that's consumer related. The reason I say that is because the next one I want to focus your attention on is right down here, XRT. So XRT is now up for the year. That's very important. I talk a lot about leadership, how to find leadership, either in individual stocks or in this case, in ETFs. If you know which areas of the market are leading in a particular time frame, or which individual stocks are leading in any time frame, and they're doing it despite what the market does, you've got powerful stocks to trade from the long side, and they don't have to be hitting new highs. All right, so next step, we know that SMH is a place to look, we know XLP is a place to look, and now we know XRT is a place to look. Now, before I can go forward on this, I need to bring in the market watch chart, as I call it. All right, So here's the market watch, and the reason I'm calling it market watch is because we've got the four major indexes: SPYs as the S&P 500, Qs as NASDAQ, Diamonds is the Dow, and IWMs as the Russell 2000. I'm not going to go into this in great detail, but the reason that we have SPYs in a bearish mode was because yesterday they closed under the 50-day moving average, which is this blue line, and the 50-day moving average is under the 200-day moving average. If you want to learn more about that and the phases, you can find that in the help section of Little Big View where I just was. Now, so the part of the market, the reason that the market is dicey is because the market has rallied right back up to the 50-day moving average, and yesterday looked actually shaky as it closed below it. So the question you have right now as a trader who might want to get bullish in a period where it might be dangerous to be bullish is all based on the fact that we're coming back up through the 50. And the big question on traders' minds is the 50-day moving average going to hold the market down, or is the market going to transition through it? We get what we call a change in phase, and this is some of the best times to look for dynamic moves in the market. In this case, dynamic up or down. This video is focused on how to trade it from the long side. I started by showing you I want to focus on the sectors that are doing well. If the market's going to continue higher, the sectors that are already leading are probably the sectors that are going to lead the market through this inflection point. If the market rolls over, right, and I could draw that on any one of these charts, if the market rolls over, then at least you're in some of the stronger sectors, and while you might get stopped out, it's less likely that they're going to completely collapse. Most likely, the market will not make it easy on traders, and it will probably create some volatility, shake weak holders out, and then do whatever it's going to do. And if that do whatever it's going to do is higher, then you want to be in stocks or in ETFs that while the market is trying to shake everybody out, you don't get shaked out of. That's why you want to focus on the strong ones or the ones that are in specifically good positions to trade. So let's take a look. All I've done, I've identified the sectors we want to take a look at. Those the XLP, the XLY, and the XRT, consumer-based stuff, or I should say SMH. So let's take a look at some of the stocks that are in those particular sectors. Actually, as I say that, I realize that I may have forgotten to point out the XLYs. So let's go back to the screen here because I am going to cover XLY. And the reason I'm covering XLY is because it's consumer. This is consumer staples, this is consumer discretionary, and on a 6-month basis, it's starting to turn positive. All right, so from a consumer point of view, we've got the retail, we've got the staples, and then from just a pure who's leading, we have the SMHs. All right, so let's take a look at different ways that we can play all of those areas. Now, for individual stocks, I pulled this in. I'm going to take a look at it on our triple play indicators, and the reason I'm going to do that is because it shows you leadership. So the indicator down here is a leadership indicator. If the blue's over red, then whatever instrument you're looking at is leading on the way up. If the blue is under the red, then it's leading on the way down. So let's just start with semis because that's the one that came up first. If we look at semis, you want to look at where they are relative to the benchmark that you're focused on with the overall market. So in this case, here's the 50-day moving average right here that the market's struggling with. Meanwhile, the SMHs have already broken through it and moving higher. So if the market starts to try and shake people out, you're going to look for opportunities in the SMHs when it pulls back to this level of support. How exactly you do that is a little more in-depth than I can get into with this video, but if you recently saw our Trading Essentials promotional marketing material. You'll find more information in that top. Keep your eyes open on the email. So pullbacks in SMH, definitely ones you might want to take a look at. But also, you can dig into SMH. I've done this with you before in these videos. What you do is you go look at SMH in Yahoo Finance, see what stocks are in there, and you'll find, for example, QCOM, one of the largest in the index, has put in a really strong move above its 50-day moving average and is now consolidating nicely. So you've got an opportunity to look for a pullback, whether it's back to the 50-day moving average or a breakout over the consolidation or pullback into this support here. This is where you want to focus if you want to trade from the long side, and you're going to focus on trading from the long side until the market really rolls over and starts to head lower. Now, if you're a Trading Essentials member already, you know how powerful and how to use that 10-day moving average to tell you when the rollover has completed and it's moving lower. All right, so keep an eye on that, on the market, and on these individual stocks. Now, one of the biggest stocks in the SMH is Intel. So we have to look at that. Intel looks interesting, but it's not outperforming, right? It's not outperforming on the 50-day moving average. It's not really outperforming on the leadership. So we don't need that one. But its cousin, as I like to refer to it, Texas Instruments, completely different picture, right? It's over the 50, it's over the 200, consolidating nicely. Now the 50 is negatively sloped, but if this can get over 54, you've got a nice looking breakout on a stock that's looking strong. All right, so keep an eye on that one. Another one that looks very similar in terms of being over the 50 and over the 200 is AVGO, right? Now, this one is clearly in a range, so if it comes up to here to 138 level, breaks out above that, it's an interesting breakout. But if the market's shaking, trying to shake people out, this is one you might look at on a pullback down towards this 10-day moving average, which is the magenta line, right? Now you can see on the triple play, this thing's really beginning to shape up. It's telling you that it could become a leader, much like the same indicators helped us identify CRE several weeks ago as a stock that's breaking out in the semi group, right? So I did the same type of analysis with semis a while ago, been watching them, and CRE was a leader coming out of a base. Triple play indicators were strong, and it continues to just move right up with that 10-day moving average. All right, so there's your semiconductors. Now let's take a look at your retail. Now with retail XRT, one of the things with retail is that the ETF doesn't have any really large components to it. It's very diversified, so it doesn't give you as much insight in terms of what's driving this ETF by just going and looking up the top 10 holdings. So this is telling you focus on retail stocks that are strong. You can even focus on this one. The key level on this, which I'll give you as part of this video, is any pullback to this 42 level. Why? Because it's still slightly over the 50-day moving average, which is turning up, and it lines up with this low and this low. So again, if the market's trying to shake people out and XRT pulls back into around the 10-day and the 42 level and you find a reversal in there, that's how you can play this and be bullish in a market that might be pulling back, right? I'm not so sure I would chase it up here, but I would definitely keep an eye on it. All right, so now let's go to XLY. So XLY does have a big component, Amazon, right? XLY, but now over the 50, coming into some resistance. So is it clear sailing? No, not necessarily, but it's stronger than the overall market. So while if the overall market gets volatile, a pullback in XLY is a pullback you want to take a look at. In terms of individual stocks, there is a big component, and that's Amazon. It's 10% of it. Now, when you go look at that, you can see on triple play it looks good. And the volume part of triple play, which I haven't even described, looks great. And it's consolidating its 200-day moving average, now breaking out above it, depending on how aggressive you want to be as a trader. A breakout over here with a stop under the consolidation is one way to play Amazon in a really easy way. And like I said, if this market surprises everybody and moves higher, Amazon moving just back up to underneath its old highs at 650 would be a 100-point move on a $600, $650 stock. That's a pretty good move, and you've got a really tight stop. Some other interesting stocks in the XLY, Disney, right? A little bit more of a conservative stock, but you can see it's got a really interesting pattern here. It isn't beating the market relative to its 50-day moving average, so this one's a little premature in terms of its leadership, but its pattern over 97 with a stop under the 93 level gives you a big picture trade that even if it just goes back up to its 200-day moving average, it's a 10-point move, and at that point you've got a good profit in it to decide whether or not you want to get shaken out with the volatility around the 200, which is almost inevitable, or hold on to see if it moves higher. And finally, another XLY stock worth looking at, Starbucks. All right, this one is over the 50. The 50 is over the 200, so you're in a bullish phase. Leadership on the triple play is not there yet. So if you do have triple play, if you play this breakout above this consolidation, you'll want to see the leadership kick in. But the point here is that as the markets are fiddling around with the really dangerous inflection points, there are stocks like the ones I've just shown you. There's ETFs like the ones we've just looked at that are leading the market higher. These are the ones you want to focus on. Let the market do its volatility thing. Identify your good risk points in these particular leaders, and buy some on breakouts, buy some on retracements, and with good stops. You can ride the storm, if there is one, and be in the right place if the market turns higher. And as long as you keep your discipline, if the market turns lower, yeah, you'll get stopped out of most of your trades. But the upside is much bigger than the downside if you approach the market this way. I hope this helps. If it does help, keep your eyes open for a few particular programs that we offer. The triple play, as far as the indicators you see down here, and trading essentials will give you the core ways of being able to do the analysis you need to really identify your entries and exits on ideas like the ones that I just presented here. Hope that helps. See you in the next video.